So calls a little cheaper today, helped us close up above the implied move and slightly above gamma neutral, but we had a hard time breaching GN on the weekly. Although that was last night's GN on the weekly. I guess it moved down this morning. So are we above it? Yeah, we are. Okay. So we did breach GN on the weekly, but we didn't pick up a whole lot of positive gamma on that breakout. This does give everyone like an opportunity to reposition and start pushing higher, though. The next fairly important level, I think, like 6770. Also maybe like 6746 to the upside of spot. Um, Definitely a little bit of a reversal starting to form here, and things should be more stable going into tomorrow with a little bit of market maker support. Um, ES still a bit short of its breakout point, and this trend could still fail, and we could still fill if we didn't fill that lower gap. Oh no, we did. Okay, so we did fill the lower gap and bounce. So I don't know. There could be a little bit of a pullback towards like 6680 maybe before breaking out to the upside, but we'd probably confirm the breakout at 6766 and then 6812 confirming more upside reversal back towards like all-time highs, or at least back towards like 6900. um Dollar dropping a little bit today, but mostly flat. Yields at the top end of the curve falling back. Still quite a lot of demand out here for bonds. Um, we're seeing the yields pull back a little bit on those, which I don't know if that demand stays steady, could kind of incapacitate the rally a bit here. Correlation hit a low earlier in the day, and then 1 month correlation continued a little bit lower, but 3 month correlation did not. Um, and watch this for reversals. Obviously, big move in dispersion in the early part of the day, but not much in the back half. And that's kind of when we started to see the put selling slow down once we got over 6,700. Commodities, precious metals did really well today. Obviously, Fed rate cut back on the table for the time being. So you could expect gold and silver to probably continue to overperform until news breaks that, which PPI tomorrow could. Retail sales is also tomorrow. Both of those are the September reports. Oil back up, but still under 60 a barrel on uncertain news from Russia and Ukraine. The pullback in 3 month correlation might see bond volatility drop a bit, but definitely not today, especially with the top end of the curve moving. Forward yield on volatility remains positive. That's something that is notable. And leverage on the carry trade is still very elevated, although down a little bit from Friday's high. Skew, well, Skew Friday went up. Probably up again today. Breadth improved on Friday pretty substantially. Bunch of stocks moving back over their 200-day moving average. And correlation between VX cash VIX rose today. It's 84.45%. So we're not seeing a lot of short vol coming in. Although Wednesday is the VIX expiration, so that could be one of the reasons we're seeing correlation increase into the rollover. So shakier indicator right now, but still interesting that we're not seeing a ton of short vol pile in and correlation go down. But we may have to wait till after the VIX expiration to see that. Fed fund future cuts, or chance of a cut. And looks like March fell a little. July also. Whoa. 10.2, moving down a little bit today. 4.8. And the SOFR spread widening. Remember, the end of this week is the end of the month, so we should start to see money being funneled into RRP, the overnight repo, and that's gonna create some illiquidity here. We'll see how rapidly the spread widens into Friday. Friday is a half day and the end of the month. And you know, we all know back in October, we got a fairly significant spread, and the cost of short-dated cash went up very, very rapidly. Now we're moving into the end of November. We may see the same, or possibly an even more pronounced move. So keeping an eye on this is pretty important, especially if we see SOFR start to move above the standing repo rate. That would be very concerning. Up volume, plenty of it today, but not very much compared to like bounces back in October and stuff. So, although we got a big bounce today, let's say maybe up volume's actually a little bit higher. So this might be fairly indicative of at least a turnaround in tech. Oh, fuck me. That's wrong. It's like leverage moved up a little bit today. And that's kind of in line with what we're seeing on SPX. So bulls levering up into the run. We tested the 50 moving average today. Met some resistance. Failed to close above it, but we did close above 66.99, which is an important technical level, and I believe that was also the September high. So above that, pushing off of here could open up tomorrow for like a test at the 20 MA, which we got rejected off of very sharply in last Thursday. Something that's notable here is this is essentially mean reversion into the PPI print from a technical perspective, and if the PPI print is bad or hot and it starts to take that December rate cut back off the table again, we could definitely fail. I would say we would probably fail and fill the gap down to 6,600. But then, you know, obviously if retail sales is bad as well, we could push down to a lower low, possibly testing like 6508, which is the August high. So a rejection from here could be really, really nasty, especially with Delta picking up on JPM puts. So if we do get one and PPI is really bad, just note that there's a lot of range to the downside. What do you have? A 5-bagger? What? No, I didn't. I totally didn't buy the 60, 67, 10, 10 call there and then close it like almost at the top. That's fine. Anyway, that's it. So I'll see you guys tomorrow. Have a good night. Later.